we are facing a massive wall of maturities. Market participants don't seem to be particularly worried about next year. However, in the next 14 to 18 months, the United States government will need to refinance up to $7 trillion of maturing debt. Of course, it will refinance those bonds. However, what we need to take into account is that it will be at a higher cost, and also that means lower liquidity for markets, less availability of credit for families and for businesses, but more importantly, less amount of dollars available for the emerging economies that will need to refinance also a very significant amount of foreign denominated debt, up to $1 trillion in the next 2 years. All of that means weaker currencies for emerging economies, much more expensive debt for those emerging markets as well, but also that the scarcity of US dollars is likely to be exacerbated in 2024. The rating agencies do not seem particularly worried about an increase in bankruptcies and defaults because of this wall of maturities, because the credit conditions remain relatively stable, and at the same time the expected level of bankruptcies is limited. However, we need to pay a lot of attention to it, because the biggest challenge for the global economy is a massive wall of maturities with higher rates.